Hi, good evening, partners. Very warm welcome to you all. So, every time when we used to do a session with AssetPlus with many of the mutual fund companies, we used to do either on the market outlook or something on a product launch or some other sessions that we were using to do. So, this time, with the request of many partners and seeing the growth of the mutual fund industry, seeing becoming mutual fund as a financial product which is now required across every household, with more and more advertisements from mutual funds IE, more and more awareness which is creating on mutual funds. We had taken a conscious call telling that more than performance, how do we evaluate mutual funds and mutual fund schemes, more than the performance selling? How do we create more other technical and fundamental parameters to analyze and sell in the coming days is what this session is all about. So today we have Mr. Niranjan Subramanian from the learning and development team of Axis Mutual Funds, is going to enlighten us about how do we select the mutual fund schemes rather than seeing more of performance. So today, if you see, more of the direct app in the industry sorts down the schemes based on the performance. There will be something like a technology fund or digital fund or commodity fund. These kind of things will be there. But this is a community where advises the right scheme to all the clients based on various parameters that we see to choose or select a mutual fund scheme. So from here, I would like to hand over to Mr. Niranjan Subramaniam to take an enlighten us on the session to how to select mutual funds and look beyond returns in the coming days.
Yeah, thank you, Mr. Balaji, and a very, very good evening to everyone. And on behalf of Axis Mutual Fund, I welcome all of you all to this session. So when we talk about mutual funds, right, whenever we speak to investors about mutual funds and we ask them to invest in mutual funds, right, we ask the first question investor generally they ask us is, what are the returns, right? Or when we suggest a fund, जब हम कुछ fund suggest करते हैं, they say, sir, why are you giving this fund? This is not a top performing fund, right? Please give me हमें वो top performing fund दीजिए. Give me the top performing fund of this category or of mutual funds, right? So this is the mistake investors do, right? This is the mistake retail investors generally do because many of them are uninformed. They only hear, oh, returns are so good, returns are like this. They hear their friends talk, okay, I've invested in this fund, I've got 100% returns. But maybe this 100% returns is over a period of 4 years. Or maybe like in the last 1.5 years, 100% returns in 2 years, right? But they remember, sticks in their head, oh, 100%, right? So what happens is people only go by what they hear, right? It's hearsay. Somebody says, I've invested in this stock, it has doubled in a few days or in a few weeks. But that is speculation, right? And because of this, what happens? Most of the times, investors end up losing money in the wrong time or getting out of their investments in the wrong time because they don't understand the concept of risk, right? And we know that investing in capital markets always has some amount of risk in it, right? Investing in capital markets always has some level of risk associated with it. We cannot do away with risk in mutual funds because that is how we generate our returns also, right? The simple concept we say, higher the risk, higher is our expected returns, right? So risk and returns go both hand in hand. But as an investor, investors only hear about the returns, right? Especially in a bull market, right? They see, okay, 100% returns, people advertise, companies advertise, or we see in the papers, this fund has doubled your money in so many years, invest, it's a good product. Just that, they don't mention the risk of the fund, right? So as investors, as distributors, we also need to be aware of what are the risks in the fund, right? Because that is very important for people, for us to understand and for the client to understand and for you all to understand, okay, this is the risk. So this could be my potential risk in this fund. And especially if you see the last 4 or 5 months when the markets are very volatile, right? Clients come running back and asking, why is my fund giving losses? So this is where helping them to understand the concept of risk comes into play. And second, one more very important thing. See, when we talk about returns, right? Investor only sees the returns and they say, okay, the returns are bad. I don't want to invest in this fund. Returns are good. I want to invest in this fund. Our conversation does not go anywhere about that. But see, we say past performance is not an indication of future, correct? That is a fact. So maybe the fund has been a top performer, but today it is underperforming. But we also want to know whether the fund will perform going ahead, right? See, we have got many funds which have been in this industry for 10, 15, 20, 25 years. Maybe last 10 years, this fund has done extremely well. But now in the last 1 year, it has not done well, or last 4 or 5 years, it has done well, now it's not done well. But then will this fund do well even going ahead? We cannot predict because equity markets are unpredictable. But we can look at certain parameters, right? Apart from returns, which could give us the comfort that these funds are making right investment decisions, right investment choices, which have a better probability of succeeding going ahead, right? So we are not just looking into returns, the numbers, they are important, but we will also look into other parameters which could be considered, right? Which could be considered so that we don't just talk about returns only. So let us just delve into that. Right? But before understanding the risk, let us just run through what are the returns. Risk and returns, right? Risk concepts. So what do we mean by risk? Right? If you all could just type the answers on the chat box, it would be quite helpful to this question. Let's try to make it a little interactive, right? So let us try to understand what is your understanding of risk. If you could just type it in the chat box, the answer, if possible. Chances of losing capital. Absolutely. Fear of losing money. Correct. Anything else? Losing money, losing the principal. Correct. Right? But suppose say today, I have done my research, I have done a lot of ready to lose to gain better. Absolutely correct, Ashwatosh sir. So say today I've invested 100 rupees, right? And what is the probability that this 100 will become 0? Say I've done a good research, I've selected a good investment, right? What is the probability that in the next 1 year, this 100 will become 0? In a good mutual fund or in a good equity, right? What is the probability that this 100 will become 0? Is it very high? Almost nil, right? Nil. So that risk we can sort of forget, eliminate, right? The risk of 100% losing a principal. But then what is the risk? This 100 can become 90, can become 80, can become 70. Yes, quite possible, high. Or the chance that this investment 100 can become 110, 120, 130, high, right? So that is what is risk, is that our understanding of risk is basically that the risk of losing my principal temporarily. Please remember this. When I'm making an investment, my risk, biggest risk is that I have invested money today and I could lose some amount of this money, temporarily lose my principal because of market conditions, right? That is what is risk all about. Why does this risk, why are markets so volatile? Dependent upon several controllable and uncontrollable factors. Absolutely correct. But mainly they are uncontrollable factors, right? The war, inflation, interest rates, and all are things which are not in our control. So when I talk about risk, I might get a little technical. If you want any clarification, type it in the chat box. I'll explain. Yes, it is emotional rather than rational, right? So when I say risk, right, we can divide risks into 2 types, right? Systematic risk or unsystematic risk, right? So when I say systematic risk, right, I think the best case scenario is let us go back few months earlier to Jan 2022. It was the start of a new year. We had just come out of COVID, right? The world was opening up. Economy was growing very strong, very good. Everyone was telling, "Arey, economy is going to do great. We will see markets at new highs." Everyone was investing money, right? But then suddenly things changed in February. There was a war. Come March, April, inflation shot up. All the central bankers who are talking about inflation being low, interest rates not going up, started raising rates, right? This is what I call a systematic risk. This is a risk which I have no control upon, right? So the risks which you are telling, right, which I have no control upon, inflation, interest rates, war, is systematic risk. That is the risk that is going to affect my entire market, right? Whether my company is doing good, company is doing bad, it doesn't matter. If my markets are going to correct, my stocks are going to correct, right? So that is a risk which I have to take. That is what we call as market risk, right? That is what we know as market risk. This is the risk which every investor will take. But there is also another risk known as unsystematic risk, which is a risk specific to a very sector, right? Say, for example, today the currency is depreciating, right? So a depreciating currency is positive for my export sector, is negative for my import sector, right? Or the other risk is, say, commodity prices are going up, right? So when commodity prices are going up, it benefits the commodity manufacturers, like we saw, right? When iron and steel prices went up, my steel companies had extraordinary profits. Oil companies had extraordinary profits, right? My oil exploration companies had extraordinary profits. Commodity companies were having the best profits in their life. But on the other hand, my consumers, my automobile companies were underperforming because of price hikes. FMCG is underperforming because of price hikes. This is what we call as unsystematic risk or a sector-specific risk. So as an investor, what I take is systematic or market risk. But what I can minimize is unsystematic or sector-specific risk, right? And how do I minimize this sector risk? Right, by investing in a diversified fund, by not only investing in a diversified fund, but by investing in a portfolio of different assets. Correct, Vikram? Allocation, right? Asset allocation. Invest some in debt, invest some in equities, invest some in gold, making the portfolio diversified across sectors, across stocks, right? And across asset classes. So this is the risk which I can minimize, right? So now, how do I measure this risk? Or how do I know how much risk is there in my fund? Beta, correct? And I can measure risk using standard deviation and beta. I can use this by standard deviation and beta. So now, how does standard deviation or beta help me? What I will do is I will just share an Excel sheet with you all. So now let me take this situation, right? I have two funds, fund A, fund B, right? So let us say these are the 10-year returns of the fund. Suppose say my fund A, right? So say this is my fund A, which has given me 18%. And I have got now fund B. Now, a client comes to you and asks you, "Sir, I want to invest in a fund," right? And you give him these two funds, fund A and fund B. Both are 18%. So now tell me, how will the client decide which fund should he invest in? Both are giving me 18% returns for the past 10 years. But now, how will I decide which fund do I invest in? Yes. Will I invest in fund A or fund B? How will I decide? Fund B? Okay. Anyone else? Fund A or fund B? See here, nobody is correct, nobody is wrong. Right? B. Why B? Less downside, Correct. So if some client asks you to show me in numbers, right? So this is where I will do equals to standard deviation. So you all are correct. Fund A has got standard deviation higher than fund B, right? So what do we say here? Both the funds have given me the similar returns, but fund B has given me lower risk, right? So see, when an investor wants to invest, right, they will only look at returns, right? An investor will look only at returns. They will not look at the risk. But as a financial advisor, it is your job to also make them understand the risk in the fund. It is also your job to make them understand what is the risk in a fund. Right now, suppose let me just change this. Say this is 12 and say this is 12. Even now, although fund A has given me slightly higher returns than fund B, I can still choose fund B. Am I correct? Because the risk in the fund is lower, right? So please remember this one thing. When I am choosing a fund, right? You all are also aware of it. But people need to be aware that not just look at the returns of the fund. Returns are important, but risk is also extremely important, right? Risk is also extremely important. So I can measure risk using standard deviation, right? So standard deviation basically tells me how risky my fund can be. But generally, we use standard deviation for an individual stock or security, right? So when I'm talking about mutual funds, right, I have got a portfolio of securities. So what I will do is I can, instead of using standard deviation, we can look at beta, which is a much better measure of looking at risk, right? Beta basically tries to tell me that if suppose my fund, if a market is going to go up or down by X return, X percentage, how much should my fund technically go about, right? Beta is basically doing a comparison, right? So here, let me give you an example. I have two players, Virendra Sehwag and Rahul Dravid, right? Say, let us say both of them have, let us assume both of them have played 100 matches, right? Virendra Sehwag has scored 8,000 runs, but Dravid has also scored 8,000 runs, right? Say both of them have scored 8,000 runs in say 50 matches, test matches, right? Their average, Virendra Sehwag has a batting average of 20 and Rahul Dravid has a batting average of 45 or 40, right? Now it is your turn as a selector. You have to choose one batsman. Who will you choose? Just based on the average scores. Sehwag or Dravid? Dravid. Why? Because of his consistency, right? So that is what we are looking at in a fund. And that is what beta will try to measure, right? Whether my fund is more riskier as compared to the benchmark, as the same risk as compared to the benchmark, or lower risk as compared to the benchmark. But here, please understand, this is again based on historical data. This is not based on futuristic data, right? And we know what has happened in the past need not repeat in the future. And because the fund was consistent in the past, it does not mean it will be consistent in the future. It might change. But if I need to understand how risky my fund is, I need to look at what is the fund's beta and what is the fund's standard deviation. They will give me an idea as to how my fund performed in the past and how it could perform in the future, right? How it could perform in the future. So these are two measures of risks that I need to look at. But Again, as we say, returns are extremely important, right? So when I talk about returns, what are the different type of returns we look at when we are investing, right? If you can just tell me, type it on the chat box, please. What are the different kind of returns we can look at when we look at CAGR returns? That is the most common popular returns, right? CAGR, XIRR, trailing, rolling, right? That is correct. So if you look at the kind of returns that a fund house also publishes, right? A fund house would publish, or as per SEBI mandate, what are the type of returns we need to look at? Absolute returns, correct, right? So here we have got what is known as absolute returns and CAGR returns, right? So these are the two most popular kind of returns we look at. These are also mandated by the regulator, right? If suppose my investment I'm showing less than 1 year horizon, I will show them absolute returns. If I'm showing more than 1 year horizon, I am going to show them a CAGR returns, right? Apart from that, we can also show for investors annualized returns, which is something sometimes we show, especially in case of debt mutual funds. Right? When I talk about liquid fund, ultra short term, or debt mutual fund, right, the returns we see for a few days or a few weeks. So we annualize them to a yearly basis and show. Now there is another returns which FL also told is known as rolling returns, right? But what happens is to explain this concept of rolling returns to clients become tough, right? And secondly, rolling returns are something which every individual can choose depending on their need. Right? I can choose a 1 year rolling return, 3 year rolling return, or a 3 year daily rolling return, 5 year monthly rolling return. Right? So the concept of rolling return is something which is slightly more complex and complicated, and hence people don't use that very often. But yes, a sophisticated investor, a knowledgeable investor will look at rolling returns, because that will actually give us a better understanding of the fund performance, right? A new investor or a layman investor who does not understand returns so well will look at CAGR returns or absolute or annualized returns. But for a sophisticated investor, rolling returns are perhaps the most efficient way. Actually, rolling returns is the best way to look at fund performance. But again, explaining the concept becomes very tough. So we don't use rolling returns, right? So now the biggest question arises, right? I'm talking only about returns. But is it enough to just look at the returns, right? Is it enough just to look at returns? Because what happens is, in the end, returns is explain rolling returns in Excel sheets. Sir, I will need some time because it becomes difficult to explain, right? So maybe we can take up a separate session where we will explain these concepts, how they are calculated. That this explaining this concept of rolling returns will take me at least 15-20 minutes minimum, right? So we can look at this separately when we are doing on Excel, right? So what happens is, I don't want to talk only about returns, right? Because as I said, returns is something which is based on past data, right? But if I want to talk about the future, right? I want to talk about future performance. But the problem is, we say past performance is not an indication of future, correct? But see, suppose say I'm investing in a fund, right? And I have a fund manager which has been managing that fund, say, for 5 to 7 years. So what happens is, when the fund manager is managing the fund, they obviously do their own research, they do their own investments, strategies, and they create a portfolio, right? So many times what happens is, there are some fund managers who, based on their experiences, will stay invested in particular funds, will stay invested in particular sectors, right? And we talk about investment philosophies like growth strategy, value strategy, growth at reasonable price, growth with quality, right? So these themes that are there, they follow particular stock selection, investment selection style, right? And each one of these themes perform at different times of the markets, right? So for example, today, growth is not doing well. Dividend, people are talking about dividend style, right? Dividend yield style. Or people are talking about a value investment style. 2 years ago, growth was doing very well. Value was not doing well. Maybe going ahead, we will see growth do very well, value not do very well, right? So each fund manager has their own unique investment styles, right? So maybe when we try to analyze their investment styles, we realize that these fund managers follow a particular investment pattern. They favor certain stocks, they favor certain sectors, which has done very well for them in the past, right? So what happens is, will these stocks or will these styles do good for them going ahead? Will these stocks, will these styles do good for them going ahead? That is something which we can analyze, right? Value style is doing good now. Will it do good in the next 4-5 years? Or is growth style going to do good for the next 4-5 years, right? Growth has done well over the last 10-15 years. But over the last 2-3 years, value has done well for obvious reasons. 2-3 years, markets are overvalued, undervalued stocks are doing well. But now the markets are volatile, so my growth stocks are underperforming significantly, growth style. But once the markets correct to lower levels, will growth style do well? That is a question to be answered. And within growth style, which stocks, which sectors will do well, right? And fortunately for us, what happens is we see the fact sheets, we get the portfolios, right? We know what kind of investment style the fund manager likes to follow, what kind of stocks they like to invest in, right? So that is one thing we can look at as a forward-looking thing. Whether the current portfolio, the fund manager said they're going to hold this portfolio for the next 3-5 years, will this portfolio or with this investment style outperform over a long term? So that can be a talking point apart from just returns, right? Second, is my fund manager following a buy and hold strategy, or is he constantly churning the portfolio? This is again something important, especially in equity mutual funds, right? Because in equities, fund managers say, right, they have created a buy and hold strategy. But is it getting reflected in their portfolio? Is the fund manager having a buy and hold strategy or is he constantly churning the portfolio? That we can see in the portfolio turnover ratio, right? Then third, see, today what has happened is, thanks to SEBI regulations, the classification of large, mid, and small is clear, right? But however, we have got, for example, flexi cap funds, multi-cap fund, dividend yield funds, focused funds, ELSS funds, right? Or thematic funds. These 6 categories of funds, which I just spoke about, are funds where there is no market cap bias, right? So here, what kind of market segment the fund manager is investing is going to be very important, right? Is he more large cap focused? Is he more mid cap focused? Is he more small cap focused, right? Because this will determine in the medium to long term whether my fund will do better or not, right? Say for example, today, or say in April 2020, suppose say I had a flexi cap fund which was more mid and small cap focused, would have definitely outperformed a large cap focused flexi cap fund or a multi cap fund. But today, if that same fund continues to hold high exposures to mid and small cap, it would have underperformed a large cap oriented fund, right? Am I correct or wrong? Yes or no? Yeah, you can type it in the chat box. Yeah. So what happens is, especially in my funds, which are more flexi cap or multi cap focused, here I should be very careful as to what kind of market caps the fund is taking. Are they overweight on large cap, mid caps, or small caps? Right? Because that will create a direct hit or gain on my portfolio. Then second, is my fund focusing too much on one particular sector or not? See, if you analyze any fund, large cap, mid cap, multi cap, flexi cap, small cap category, mid cap category, right? All these funds will always be overweight on banking and financial services. Correct or wrong? Yes or no? Right? Because if you look at our index benchmarks, we say BSE 30, Nifty 50, BSE 100, BSE 200. All of them are overweight on large financial services as a category, because after all, banking is the biggest sector. So they will be. But even within banking, what kind of stocks they hold? Are they more PSU? Are they more private sector? That will make a difference, right? Or what is the second most top holding? Is it IT? Is it capital goods? Is it automobile? Is it FMCG? Is it pharma? Is it telecom, oil and gas, right? So what happens is the sectoral focus will also help me to determine my fund outperformance, right? Say last 2 years in my large cap, my IT has been my top outperformer, pharma has been my top outperformer. But this year, IT has been a relatively underperformer, pharma has been an underperformer. Commodities have been an outperformer last 2 years. This year, commodity is slightly waving. This year, power has been a big outperformer, right? So what kind of stocks, what kind of sectors my fund is focusing on, that will also play a very important role, right? Third, as I said, whether I'm adopting a growth style, value style, dividend yield style, growth at reasonable price style, growth at quality style, right? So every fund house, every fund manager has their own investment styles, which is predefined. So that again will perform at different times. Next, and most important, the holdings. What are my top 5, top 10 holdings? Here again, if I open any portfolio, right, of a diversified equity fund, apart from small cap, I will notice that my top 5, top 10 holdings are almost same. Correct or wrong? People? All of them will have TCS, Infosys, Maruti, SBI, ICICI Bank, HDFC Bank, Yes Bank, Reliance Industries, L&T. These 9 or 10 stocks, HDFC, will always be present. Kotak Mahindra Bank and all those types. Correct? Yes or no? So, if all these stocks are always there, why is it that my fund performance are so divergent? That one fund might give me plus 15-20%, the other fund might give me minus 15-20%. Yes? Can you answer this? If my top 10 holdings are almost similar stocks, then why is it, and they form 50 to 60% of my portfolio, right? So why is it that my equity funds are having such a diverse performance? Some do very well, some don't do well. Why is it so? Yes? Correct. Timing of buying and selling. And most important, what is the weightage, right? Maybe one fund will have 8% weightage to Infosys. The other fund will have only 2% weightage. And today, if Infosys has underperformed, obviously my fund 2 will do better than fund 1, right? Or in fund 1, I am overweight on Reliance. Say I've got 8% on Reliance, and fund 2 has only 3% on Reliance. And Reliance is an outperformer. So obviously that will make the difference, right? So when I'm looking at the portfolio of my funds, I must pay specific attention to my top 5, top 10 holdings, how much it is, and whether these top 5, top 10 holdings could, in the next 3 to 5 years, outperform, right? And if I have a view that these top 5, top 10 holdings will outperform in the next 3 to 5 years, and these are there in my fund. So it does make sense to invest in these funds today. Although maybe these funds are underperforming. Today, my top 5, top 10 stocks are underperforming, right? Today, IT is underperforming. Banking is doing okay. But in the next 5 years, IT will be an outperformer. Banking will be an outperformer. Then I can definitely take a chance on this fund and invest in this fund, right? Forward looking, future looking. I am not looking at returns. Cash. This is again something which is very important for us to, in today's context, right? Today, my equity markets are extremely volatile, right? We are seeing 1, 2, 3% up moves, down moves. There are so much uncertainties. And especially if we look at a mid-cap portfolio, small-cap funds, many of them are sitting on cash, right? So cash can be looked at a very aggressive call or as a defensive call. Today, cash is a defensive call because there is a consensus that markets are going to be very volatile. We could see further correction. It makes sense to hold cash, right? To protect my losses or minimize my losses. But here, what is the biggest risk of holding extra cash in my portfolio? Today, it is protecting me. It is minimizing my losses. But then what is the risk? Yes, can you tell me? Opportunity loss, right? We all know that the markets, nobody has timed the market to perfection, right? Today, I am seeing lower losses because of cash. But when the markets turn around and they go up, it catches everyone by surprise, right? So it is again a risky strategy. Today, it is paying off. But when will it become a bane? I don't know. So this is again, in today's scenario, everybody is justifying the high cash holdings. Maybe they are correct. But we all know markets have the tendency to put everyone to shame, right? Today, we are getting a call right, but we don't know when the call will go wrong. So this is again a very strategic call, which we have to be very careful of. Right? Fund size, fund age, portfolio turnover, scheme running expenses. All this data is fortunately available on the fund fact sheet, right? So we can look at all this data also to see how the fund manager is managing their fund, not just returns, right? This again, relative returns. This is again something which is extremely important for us to understand is relative returns, right? See, say for example, today, you are recommending a large cap fund to your client, right? So what will the client generally do? They will Google the fund and say, okay, give me the fund, equity fund performance. Last 3 years, equity fund performance. Pata chala in Google, you get the performance of small cap funds, mid cap funds, large cap funds, sectoral funds, right? And we all know in the last 3 years, a small cap and mid cap has done much better than a large cap, or a sectoral fund has done much better than a large cap. So the client will say, sir, आप large ये fund क्यों दे रहे हो? ये तो काफी कम performance किया है. It's given very less performance. When you see, he says, sir, he is compared it with a sectoral fund, which is wrong, right? So you must say, sir, you are doing a wrong comparison. But client बोलेगा, but sir, ये दोनों तो equity है, right? Then how will you counter it? तो अगर ये question client बोलते हैं कि sir, ये भी equity है, ये भी equity है, तो मैं correct ही comparison. I'm doing the right comparison, right? How will you counteract this argument of the client? Yeah, I'm doing equity to equity comparison only. Yes, can you just type in the answer? People? Correct. Apple to apple comparison, right? तो आप बोल सकते हैं कि सर आपके पास एप्पल भी है, आपके पास मैंगो भी है, राइट? We know apple is supposed to be crunchy and sweet, right? And mango, let's say it is a ripe Alfonso mango, is supposed to be soft and sweet. अगर आप apple पे खाते हो and apple turns out to be soft and sweet, will you like it? No, right? और अगर आप मैंगो खाते हो, राइप अल्फांसो मैंगो, और अल्फांसो मैंगो जो राइपेंड है टर्न्स आउट टू बी हार्ड, विल यू लाइक इट? नो. दोनों मैंगो फ्रूट्स ही है, राइट? एक फ्रूट क्रंची, एक फ्रूट सॉफ्ट, बट वी विल नॉट लाइक इट. सेम वे जब हम एप्पल खा रहे हैं, राइट, दो रेड एप्पल है, इट हैज टू बी स्वीट एंड क्रंची. सेम वे जब हम म्यूचुअल फंड के कंपैरिजन कर रहे हैं, राइट, एज मेनी पीपल हैव करेक्टली गिवन द आंसर, फार्मा फंड हैज टू बी कंपेयर्ड विद फार्मा फंड, लार्ज कैप हैज टू बी कंपेयर्ड विद लार्ज कैप, मिड कैप हैज टू बी कंपेयर्ड विद मिड कैप ओनली. तब भी आप एक करेक्ट सॉल्यूशन, करेक्ट आंसर पे आप आ सकते हो कि ठीक है, ये फंड हैज डन बेटर और वर्स. It is not only comparing fund to fund, it is also comparing fund with benchmark, right? तो मैं large cap fund है मेरा, I cannot compare it to the BSE 500. I have to compare it with the BSE 100, right? So that I get the correct comparison. So this is again we need to keep in mind when we are looking at fund performance. So यहाँ पे I have got returns, I have got risk. So now let me again just go back to that Excel sheet, right? So let me, all of you can see this Excel sheet, please. Yes or no? Okay. So now you have suggested the fund, right? आपने इन्वेस्टर को बोला कि सर आपके पास ये दो फंड है, फंड ए और फंड बी. फंड ए ने आपको 19% रिटर्न दिया है, फंड बी ने आपको 18% रिटर्न दिया है. तो इन्वेस्टर बोलेगा मुझे 19% वाले फंड में पैसा डालना है. तो आप उनको कन्विंस कैसे करोगे? वो बोलेंगे बट सर फंड का रिस्क इज क्वाइट हाई इन फंड ए. तो इन्वेस्टर बोलेगा कि सर बट एक तरफ आप रिटर्न्स भी दिखा रहे हो, दूसरा तरफ आप रिस्क भी दिखा रहे हो. आई एम वेरी कंफ्यूज्ड. Now, how will I decide which fund to invest in? Right? आप मुझे एक नंबर बोलिए ना सर, आप मुझे दो तीन नंबर. Why are you showing me 2-3 numbers? Returns तो अलग है, रिस्क अलग है, right? It is like apple and orange. आप दोनों को कंबाइन करके मुझे एक जूस क्यों ना दे, जिससे मुझे एप्पल का भी फ्लेवर मिले, ऑरेंज का भी फ्लेवर मिले. So how will I do that? Combine my risk and returns. Yes, people, how will I combine risk and returns जिससे I can present one number, जिससे I can show the investor कि नहीं फंड बी बेहतर है या फंड ए बेहतर है? वो मैं कैसे दिखाऊंगा? Using what we call as a ratio known as, I compare it with benchmark. I've got beta. But अगर मुझे risk और returns दोनों को combine करना है, if I have to combine both risk and returns, there is what I call as the term known as Sharpe ratio. Right? Now, what is this Sharpe ratio? Tell me. See, as an investor, what does an investor want? कि उनको सबसे हाईएस्ट रिटर्न्स आए बट जीरो रिस्क के साथ. Am I correct? Investor wants highest returns with zero risk. Am I correct or wrong? Yes. But we all know it is not possible, right? कि I will get the highest returns with lowest risk. क्योंकि जब हमें रिस्क लेना है, रिटर्न्स चाहिए, तो हमें थोड़ा रिस्क तो लेना ही है. बट हाउ मच रिस्क विल आई टेक? See, as an investor, मेरे पास दो choice है, right? Invest in a product which has zero risk. But मैं ये जानता हूँ कि अगर मैं zero risk लेता हूँ, right? If I invest in a product with zero risk, returns will come low, right? Yeah, returns will come lower than that of inflation. So I cannot create wealth. So I will take some amount of risk. But when I'm taking this risk, जब मैं ये risk ले रहा हूँ, मेरे risk free investment से ज्यादा, तो मुझे returns भी चाहिए. I will need returns which are more than my risk free rate of return. तो क्योंकि मैं risk ज्यादा ले रहा हूँ, ज्यादा returns पाने के लिए, am I justifying this extra risk, right? Now suppose say my risk free rate of return, which you call as RFR, say is 7%. Right now, why did I take 7%? Anyone? Why did I take 7% as risk-free rate? FD, okay, but FD today is 5%, right? Bond, okay, correct, right? See, जब हम risk-free rate की बात करते हैं, right? It will be my government security or a bank FD, right? Debt investment, PPF, correct, right? See, when I'm talking about investing for 15 years in equity, right? तो मेरे पास कौन सा प्रोडक्ट है जो मेरा रिस्क फ्री प्रोडक्ट है 15 साल के लिए? PPF. So I can compare my PPF returns with my equity return. So that is why I'm taking 7%. It is 7.1, right? तो यहाँ पे what is happening? Sharpe ratio का formula क्या है? Is fund returns minus risk-free rate of return divided by fund risk, जिसको we call it as standard deviation, minus risk-free rate of return risk, right? तो यहाँ पे let us calculate a Sharpe ratio. What is my fund return? Fund A is 19% minus risk-free rate of return is 7% divided by fund risk. Risk-free rate का risk we assume it to be 0. So it is basically fund return minus risk-free rate of return upon fund risk. तो यहां से हमें क्या पता चलता है कि फंड बी का जो शार्प रेशियो है इज हायर देन फंड ए का शार्प रेशियो, राइट? तो यहाँ पे लेट मी जस्ट गिव यू अनदर सिमुलेशन. सपोज से माय फंड ए हैज गॉट अ रिटर्न ऑफ 23%, fund B has got a return of only 18%. But in spite of that, I can, although fund A has got higher risk, right? My fund A has got a better Sharpe ratio. So what am I trying to tell over here? कि returns को you should not look at returns. आपको returns और risk दोनों को देखना चाहिए, right? Especially जहाँ returns are very close to each other, आपको देखना चाहिए कि फंड का शार्प क्या है. Sometimes if the returns are very dispersed and standard risk is relatively lower, closer, then you can make an easier decision. But जहाँ पे रिटर्न्स आर वेरी क्लोज टू ईच अदर, रिस्क इज ऑल्सो वेरी क्लोज टू ईच अदर। फिर आपको ये भी देखना होगा कि फंड का शार्प रेशियो क्या है, राइट? ये एक रेशियो है जिससे हम क्लाइंट को समझा सकते हैं कि सर आपको ये फंड क्यों चूज करना होगा, दूसरा फंड नहीं, कि मे बी मेरा फंड बी कम रिटर्न दे रहे बट रिस्क भी कम है, और क्योंकि रिस्क, बिकॉज रिस्क इज लोअर, आपके लिए भी फायदेमंद होगा, राइट? सो दिस इज वन रेशियो which we can look at to help the clients understand, and for us also to understand, to decide which fund can I give to my client, right? Not just returns. I am not looking just at returns. I am also looking at the risk and return. Apart from this, there are many other ratios. So for example, Trenner ratio, there is a Jensen's alpha, there is a downside risk, there is others. But that is again little confusing to explain to investors. That is why what we will do is, today session we will understand what is Sharpe ratio. Right? Explain Sharpe ratio in an easy way to understand. Okay. Let me give this example again of Sehwag and Dravid. Right? Sehwag, Dravid. Say they have played 50 matches each. सहवाग ने बनाया है 8,500 रन्स, द्राविड ने बनाया 8,000 रन्स, राइट? सहवाग का से बैटिंग एवरेज, सहवाग का बैटिंग एवरेज से 35, द्राविड का एवरेज से 45, हंड्रेड्स 50s. से सहवाग has scored 20 hundreds and 10 50s. Say, or say 10 hundreds and 12 50s, 5 50s, right? 10 and 5. Dravid has scored 800s and 15 50s. So say 900s and 1850s. So say 1250s. Highest score 319, 250. Right? Ye say these are the things. Based on this data, आप कौन से बैट्समैन को चूज करेंगे as a test match player to play a match? Whom will you choose? Why? Consistency, right? तो यही आपका इक्विटी फंड एवरेज, करेक्ट? तो यहाँ पे जब आप देखते हो फंड ए, फंड बी, राइट? लेट मी चेंज दिस अ लिटिल, राइट? So let us say fund A is Sehwag, fund B is Dravid, right? Average return शायद Sehwag का बेहतर होगा, but consistency कम है, right? He is a more volatile player, right? यहाँ पे देखिए average कम है उसका. He is a more volatile player, right? तो क्या होगा? Sehwag बैटिंग कर सकता है, we know that. He might be able to score 300 runs in one day, but risk क्या है कि he can get out in the first ball. जबकि Dravid हम जानते हैं might not score 300, but the probability of Dravid getting out in the first ball is almost 0, right? वो minimum batting करेगा 30-35 balls है, at least he will bat for 100 balls. और test match में हम वही चाहते हैं, consistency, right? So that is what I am looking in a mutual fund. कि फंड रिटर्न्स तो दे रहा है, बट कितना कंसिस्टेंट रिटर्न्स दे रहा है इन अ बुल मार्केट एंड इन अ बेयर मार्केट, स्पेशली इन अ बेयर मार्केट, राइट? आज के तारीख में इन द लास्ट 6 months The markets have been very volatile. Markets have corrected significantly. तो investors obviously डरते हैं अपने losses से, right? तो यहाँ पे suppose you had given them this fund 2, returns थोड़े कम आए हैं, but risk भी कम है. तो assuming historical data holds true, आपका जो ये fund 2 है, आज के तारीख में would have given lower losses as compared to fund A. Correct or wrong? Right? जो fund Dravid था, आपके fund सहवाग से कम losses दिया होगा in a falling market. Correct? Yes or wrong? Yeah. और वो दिखाता है sharp ratio में कि मेरा fund जो है शायद compared to fund A कम return दिया है, but कम risk भी है, right? तो एज ए इन्वेस्टर मैं चाहता हूं कि मेरे फंड में कम रिस्क हो. देखिए, जब आप बेस्ट मिड कैप फंड के बारे में पूछ रहे हो तो आपको ये रिटर्न्स कैलकुलेट करना होगा, राइट? शार्प रेशियो. देखिए फंड का रिस्क कितना है, लुक एट द लास्ट 5 ईयर परफॉर्मेंस, कैलकुलेट द रेशियोज अपने आप से. देखिए, बट एक और चीज हमें याद रखना होगा कि जब हम वी हैव टू कैलकुलेट इट ऑन आवर ओन. क्योंकि क्या होता है कि हम जब दूसरों को देखते हैं, फॉर एग्जांपल टुडे आई हैव टेकन जस्ट एवरेज रिटर्न्स, राइट? कोई ले सकता है रोलिंग रिटर्न्स, कोई ले सकता है CAGR रिटर्न्स. रिस्क आई हैव टेकन, ओके, risk free rate, what is it? I have taken 7%, somebody else might take 6%, somebody might take 10%, right? तो जब हम शार्प रेशियो ये सब कैलकुलेट कर रहे हैं, हमें ये जानना होगा कि मेरा शार्प क्या है, हाउ आई एम कैलकुलेटिंग शार्प रेशियो, क्योंकि हर एक का शार्प रेशियो अलग अलग होगा, राइट? तो अगर आपको एक बेहतरीन फंड ढूंढना होगा, राइट, तो आपको ये देखना होगा कि फंड में कितना रिस्क है अपार्ट फ्रॉम रिटर्न्स, और फिर आप फंड का शार्प रेशियो कैलकुलेट कीजिए. जिस फंड का हायर शार्प रेशियो है वो फंड इज ऑन अ टेक्निकल बेसिस अ बेटर फंड, राइट? सो दिस इज हाउ आई लुक एट शार्प रेशियो. हायर द शार्प रेशियो, द बेटर इज द फंड. बट दिस इज ओनली वन ऑफ द पैरामीटर्स. अपार्ट फ्रॉम शार्प रेशियो आप ये भी देख सकते हो कि फंड का पोर्टफोलियो कैसा है, राइट? फंड का रिस्क कितना है. तो आपको 2-3 फैक्टर्स कंबाइन करके देखना होगा. पहला शार्प रेशियो, जहाँ पे आप रिस्क भी देखते हो, रिटर्न्स भी देखते हो. यू ऑल्सो लुक एट द फंड पोर्टफोलियो, whether the portfolio, how it has performed in the past, whether it will perform going ahead, it could perform going ahead. तो ये दो फैक्टर्स को कंबाइन करके you can decide upon which fund you can give, right, for your own consumption. But हाँ, sharp ratio is a very good measure of trying to understand the fund performance. Generally आप sharp ratio calculate कर सकते हो for a 3-year period, right? आप sharp, we cannot suggest, right? I come from Axis Mutual Fund. I don't do all this. So I will obviously say the Axis Mid Cap Fund is a good fund because I am doing that. I am in Axis Mutual Fund. I will obviously only suggest Axis. And you can ask your people or somebody who can guide you on a good mid cap fund. या आप खुद से कैलकुलेट कर सकते हो शार्प रेशियो फंड का, राइट? आप खुद से कैलकुलेट कर सकते हो ऑन द फंड शार्प रेशियो. सो दिस इज वन ऑफ द वेज वेयर यू कैन डू अ शार्प रेशियो, राइट? सो दिस इज देयर. Apart from this, if I have to look at any other methods, right? So this is one of the best ways I can look at my portfolio, Sharpe ratio. दूसरा, I can look at Trenner ratio, otherwise I can look at Jensen's alpha. But ये तो again is little difficult to calculate and difficult to explain. So just look at Sharpe ratio. That is going to be a very good method to understand how do I look at my fund performance. So I think with this, we have more or less come to the end of this session. अगर आपका कुछ भी doubts, queries है, You can feel free to ask. Last slide. Okay, just 1 minute. One second. Yeah, right. Sharp, Trainer, Jensen's Alpha. But today I am focusing only on Sharp ratio because it is a ratio which people understand, right? लोग समझते हैं क्या है Sharp ratio, क्योंकि ये एक रेशियो है जहाँ पे बहुत बातचीत होती है. People talk about it. You all also talk about it. Fund managers talk about it. Paper में people talk on TV. They talk about Sharp ratio. So people have heard of it. They can understand it easily.
निरंजन जी,
Yes.
ये शार्प रेशो कितना होना चाहिए? 1 से नीचे होना चाहिए, 1 के ऊपर होना चाहिए, ऐसा कोई डेफिनेशन?
नहीं. There is no standard comparison, sir. Sharp ratio आपको again compare with other funds. आपका अगर Sharp ratio दूसरे फंड से ज्यादा है तो बेहतर है. ऐसा कोई नहीं है. We cannot say कि Sharp 1 से कम है बेहतर है, 1 से ज्यादा बेहतर है. जो Sharp ratio, जिस फंड का Sharp ratio दूसरे फंड से बेहतर है, it is a better fund. Can we take 2 live funds? I don't have 2 funds to compare right now. And again, as I said, I am representing Axis Mutual Fund, so we cannot compare our fund with other fund over here. It is wrong for us to do that. हम सिर्फ हमारे funds को compare कर सकते हैं, जो शायद गलत आपको indication दे सकता है. So we cannot compare my fund with another fund.
Okay, thank you.
Yeah. So you can do on your own. आप देख सकते हो कि Sharp ratio कैसे करें.
अच्छा, कोई वेबसाइट है जहाँ पे ये मिलता हो, अवेलेबल मिलता हो, रेडीमेड अवेलेबल मिलता हो?
हाँ, आपको आपका जैसे मॉर्निंग स्टार, वैल्यू रिसर्च, वहां पे सब मिलता रहेगा ये कैलकुलेशंस. ये आप खुद से कर सकते हो, राइट? यू कैन लुक एट. This I showed you just now. How do you do Sharp ratio, right? Excel में.
Yeah.
Right. You can just see that formula also. Right. It is basically fund return. ये देखिए, this is the formula for Sharp ratio. Fund return minus risk-free rate of return upon the standard deviation. Right? It is fund return upon the risk-free rate of return minus risk-free rate of return upon standard deviation. तो ये है फॉर्मूला. तो आपके पास, सो एग्जांपल से आपके पास एक फंड, आपके पास 3 फंड है. आपके पास वो 3 फंड का 3 साल का रिटर्न है, 3 साल का स्टैंडर्ड डिविएशन है, राइट? आप देखिए आपको कौन सा रिस्क फ्री रेट ऑफ रिटर्न लेना है. बैंक एफडी लेना है, 10 ईयर जीसेक यील्ड लेना है, पीपीएफ लेना है, तो आपको वो कैलकुलेट कर सकते हो. हाँ, AMCs takes CAGR returns for calculating Sharp ratio. रिस्क फ्री रेट ऑफ रिटर्न हर फंड हाउस का अलग अलग होता है, so वो फैक्ट शीट में डाला जाता है, राइट? जनरली रिस्क फ्री रेट ऑफ रिटर्न वी लुक इट एट आवर T-bill yield, 6 months T-bill rate या MIBOR रेट. फंड हाउस का जनरली रिस्क फ्री रेट ऑफ रिटर्न होता है MIBOR रेट. बट आप आपके हिसाब से रिस्क फ्री रेट ऑफ रिटर्न ले सकते हो. जीसेक 10 ईयर जीसेक के यील्ड ले सकते हो, पीपीएफ के रेट ले सकते हो, बैंक एफडी के रेट ले सकते हो. फॉर एग्जांपल आप एसबीआई के बैंक एफडी रेट ले सकते हो, राइट? और फिर आप शार्प रेशो कैलकुलेट कर सकते हो और देख सकते हो कि कौन से फंड का शार्प रेशो हाईएस्ट है, राइट? और उसके हिसाब से आप एक डिसीजन ले सकते हो कि ठीक है, ये फंड का शार्प रेशो बेहतर है तो ये एक बेहतर फंड हो सकता है. बट अगेन शार्प रेशो इज वन ऑफ द पैरामीटर्स. इसमें बाकी सारे भी पैरामीटर्स हैं, राइट? जैसे बोल रहे पोर्टफोलियो, इसका वो सब. बट शार्प रेशो एक ऐसा पैरामीटर है जिससे हमें बेहतर आइडिया आ सकता है. वी कैन गेट अ बेटर आइडिया as to the fund performance.
इस शार्प रेशियो का क्रेडिट हम फंड मैनेजर को दे सकते हैं?
हाँ, थोड़ा फंड मैनेजर को भी हम क्रेडिट दे सकते हैं. Yes, we can give credit, क्योंकि अगर फंड मैनेजर रिस्क मैनेज कर रहे हैं, राइट? फंड मैनेजर का भी काम है रिस्क मैनेजमेंट. कि लॉस में अगर अब फंड इक्विटी अगर मार्केट करेक्ट हो रहा है, उसमें फंड मैनेजर कम लॉस दे रहे हैं, और जब मार्केट तेजी में जा रहा है, is able to reposition his portfolio faster. He's doing a good job. SIP inflow in fund is important. Falling market, ऑब्वियसली कि अगर मार्केट करेक्शन मोड में है और वो फंड में पैसा आ रहा है, तो एक्चुअली फंड मैनेजर को बेहतर, इट इज बेटर, क्योंकि he will get more money to deploy at lower levels, right? So if money is coming in the fund even at lower levels, the fund manager will benefit because he is getting more money to invest at lower levels.
Good. Niranjan, hi. So I think we are running out of time. We are now already 6:15.
Yeah, just one more question is asked.
Yeah.
I'll just ask, what is this high AMC also risk? What do you mean by high AMC?
It seems AUM.
AUM? देखिए, AUM is equities में large cap, multi cap, flexi cap type funds में it shouldn't be too much of a risk, right? हाँ, very large AUM sometimes in mid cap, small cap could be a problem in a falling market. Could be. Fund is set to perform better if beta ratio is low or more. देखिए यहाँ पे जो बीटा की हम बात कर रहे हैं, right? It is a matter of volatility. Say for example, in the last 6 months, the fund manager has been sitting on a lot of cash. Right? मेरा एक small cap fund है, fund manager is sitting on high cash. Automatically, his beta will be low, right? As compared to a fund who is sitting on 95% of stock, his beta will obviously be high. So हमें ये भी देखना होगा कि beta क्यों low है. Is it because of the stocks he's owning, the beta is low, or is it because they are sitting on high cash levels, or is it because they are sitting on lower equity exposure? Is it because of that? Yes. So that is that. I think, yes, as sir was saying, with this, we have little overshot our time. When is the right time to book profit? When you are very close to achieving your financial goals, right? When you're close to achieving your financial goals, then it is time to book profits.
Niranjan, so
Yes.
as we are coming into the session, could you give us some 5 to 6 pointers that our advisors should look in presenting to the clients while presenting the portfolios? As you have spoken for the last 1 hour, can you give us some 5 pointers that these are the things that if we go and talk to the investors in the market in correlation to the current market and things, what are the things that we need to speak?
Okay. In relation to the current market scenario?
Yeah.
So, see, in relation to the current market scenario, one thing is certain that equity markets are volatile today because of reasons not in our control, right? Because of the war, there is high inflation, high interest rates. But we also know for a fact that this is not going to last for long, right? This is not going to last for long. And when this war stops or when inflation comes under control, things will change very fast. Today, look at this opportunity, falling market as a sale, which is happening, right? We all love sale. And in sale, we go to buy more, right, of products. So look at this as a sale happening in the financial markets. 6 months ago, a fund which I was getting at an NAV for say 50 or say 100, today is available at an NAV of 80. 100 has become 80. So I'm getting it at a 20% discount. Right time to buy. Because this fund has a track record, say, of 10 years. It has given consistent 10-15% CAGR. But today, because markets have corrected, my fund has corrected. And I know in the next 5 to 10 years, markets are going to go up from this level. This fund will do well. So this is a sale. This is a golden opportunity to buy more at lower levels. Give them the example of April 2020. Anybody who's invested in April 2020 today is sitting on huge profits, right? And that April 2020 investment has given them the best returns in the last 2 years. So look at it that way. Today I'm investing at lower levels. When the fund goes up, the performance goes up, markets go up. This investment which I did at lower level will give me the best returns, right? So don't fear the falling markets. It is an opportunity. It is a sale happening in the financial markets. Go and buy, but don't put all the money in one shot. Put little, so that we can capture the market downturn. This is what we can look at communicating to people when we are going to meet them today.
Great. And to summarize the session, that 5 points, what all you have spoken, could you give us that 5 points, the tools that we can pitch?
Definitely, sir. See, the first thing, returns are important. right? In the end, I am investing for returns. But return should not be the only criteria to decide an investment. Because second, risk is also very, very important. We need to understand the risk in a fund, right? Third, I have to also look at other parameters apart from returns, right? For that, I have got something like what is my fund portfolio, how the fund manager managing the fund. Because returns are based on historical data, and what has happened in the past need not repeat in the future. But if we need to understand the fund manager's thought process, we have to understand his stock selection, his rationale behind the stocks, and whether these stocks they have selected will do well going ahead, right? Fourth, when I'm looking at a fund performance, I cannot look at returns in isolation. I cannot look at risk in isolation. I need to combine both of them. And that is where something like a Sharpe ratio helps us to understand the risk and the returns together. And most importantly, when I am looking at the performance of my fund, I must compare my fund with the right set of funds. Large cap with large cap with NSE 50 or NSE 100 or a BSE 100. I cannot do large cap with mid cap, large cap with small cap. It will be wrong. Same thing when I'm looking at a Sharpe ratio, there is no set benchmark for a Sharpe, whether this is good or this is bad. Sharpe ratio of my fund should be compared with Sharpe ratios of other funds in my category, right? And see which is a better Sharpe ratio. And then decide which fund do I invest in. So I hope I've been of good help to you all in trying to understand upon these funds, like how to look at funds apart from returns.
Yeah. Thanks, Niranjan. In fact, it was a very nice session today. So we look forward to do one more knowledge-based session again with you. Dear partners, if you require any other particular topic for Niranjan to present in our next session, please feel free to tell to us, or you can post in the chat so that we can arrange one more session with Niranjan again.
Thank you, everyone.
Thank you, Niranjan. Thank you, partners, for joining today.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.